For the longest time, the worlds of finance and nature might as well have been on different planets. They spoke completely different languages. But that's changing, and it's changing fast. There's this quiet but really powerful revolution happening that's creating a whole new vocabulary, one that allows money to finally understand the planet. And to see why this is such a big deal, we first have to understand why the old way just didn't work.
You know, the alarm bells have been ringing for a while. This warning from Albert Schweitzer, it's almost a century old. But for decades, warnings just like this, no matter how true they were, simply didn't compute inside the logic of our economy. They were filed under moral problems, not financial problems.
And this image, it just captures that stalemate perfectly, doesn't it? We could all see the danger. The science was clear, but the economic engine just kept chugging along on the same old fuel. The whole system was designed to measure one thing: profit and loss, not planetary health.
So here's the absolute core of the issue. There was this fundamental disconnect. You had environmentalism over here, talking about ethics, ecosystems, and future generations, and you had finance over there, talking about quarterly earnings, risk, and return on investment. They were two totally separate conversations, and the result? Gridlock. Real systemic change was basically stuck in park.
So how do you possibly bridge a gap that wide? Well, you invent a translator, a sort of Rosetta Stone, a way to translate the value of the natural world into the language that business and finance understand. And the very first word in this new dictionary is a concept called natural capital.
So this first key term, natural capital, it's a game changer. It reframes nature not as some pretty backdrop for our lives, but as a productive asset, just like a factory or a piece of machinery. It's a stock of capital. Forests, clean water, stable climates, that provides a constant flow of services, things like crop pollination or flood control, that our economy literally cannot function without.
And that simple reframing, well, it changed everything. All of a sudden, the conversation wasn't just about ecology anymore. It was about economics. It completely shifted from a moral appeal, hey, we should protect the planet, to a cold, hard financial imperative. You need to protect your portfolio from the very real risks of a dying planet.
And this isn't just some abstract idea. This chart makes it totally concrete. Just look at agriculture. It has 18 different material dependencies on nature. Hydropower has 10. These massive industries are completely reliant on the free services that nature provides. So what happens when you disrupt those services? You disrupt the business. Period.
And here's exactly how that risk dominoes through the system. An environmental event, say a drought, it doesn't just stay out there in nature. It hits a business, a farm in this case, which in turn hits its lender. And boom, just like that, a natural capital risk has become a credit risk sitting right on a bank's balance sheet.
But it's not just about how nature impacts a company. This new language also forces companies to look in the mirror. It creates a two-way view that also asks a much harder question. Okay, but how is my business impacting the world?
And this brings us to our second key term, double materiality. Now, in accounting, materiality just means something is important enough to matter on the books. So double materiality is pretty simple. It just says there are now two ways something can be important, and you have to report on both of them. This slide breaks it down perfectly. On one side, you've got the outside-in view. That's classic risk management. How do things like climate change create financial risks for my company? But on the other side, you've got the inside-out view. This is the new part. It asks, what is my company's actual impact, good and bad, on the environment? And for the first time, companies are being legally required to answer both questions.
And this isn't just a vague idea. Regulators have laid out a formal 4-step process. Companies have to really understand their own business, identify all their impacts and risks, figure out which ones are actually material, and then, this is the crucial part, they have to report all of it transparently. So, we have the new concepts, natural capital and double materiality. That's the vocabulary. The final piece of the puzzle was to turn this new language into a single global rulebook that everyone has to follow. Because for years, sustainability reporting was just a mess. It was this confusing alphabet soup of different standards. GRI, TCFD, SASB, you name it. Companies could basically pick and choose whichever framework made them look the best. It made it impossible to compare anybody, and it was pretty much chaos.
But then, things started to consolidate, and they did it fast. As you can see on this timeline, the TCFD really laid the groundwork. Then, the big guns, the IFRS Foundation. These are the people who set accounting rules for most of the world. They stepped in and created the ISSB to unify everything.
By late 2023, the TCFD had handed off its work and disbanded. The alphabet soup era was officially over.
And what's really crucial to understand is that this wasn't about throwing out the old rules. All the best parts of the old system, all those TCFD recommendations, they're fully baked right into the new ISSB standards. It was a massive upgrade, not a reset.
So what does this new rulebook actually change? Well, it raises the bar a lot. Companies have to get way more specific now, disclosing data tailored to their industry. They have to come clean about how they plan to use carbon credits. And this one's huge. It forces banks to account for the emissions of the projects they're financing. The level of detail required now is a giant leap forward.
So after all that, what does this all add up to? What's the new bottom line, not just for business, but for all of us?
To put it as simply as possible, sustainability has graduated. It's no longer something you find in the back of a glossy annual report with nice pictures of trees. It is now a mandatory, auditable, and legally required part of a company's financial filings, right there alongside revenue and debt.
And this leaves us with the big question. For better or for worse, we have finally translated nature into the language of money. We've put a price on the risk of its destruction. And the question that we all have to ask now is, will that finally make us treat it as if it's truly priceless?
The tools are finally in place. The world's most complex, most vital systems, our climate, our oceans, our biodiversity, they're all being entered into the global financial ledger. This isn't the end of the story. This is the beginning of a whole new era of accounting,